Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be on Discovery Watch, and it is getting more fun all the time. Stocks are moving across the board in the resource sector. Discovery stocks are moving, and even my subscribers are starting to like me again. These are good times happening.
John, Galway Metals looks like it wants to break a buck on the upside. Is there anything new from Clarence Stream?
There are a couple things that are new. The first is the company has done a $17 million financing. They are busy trying to demonstrate that in New Brunswick, Clarence Stream is a big gold district related to these intrusions that came up, and this is called an intrusion-related gold system. You get a lot of high grade, and the key is to put together a whole bunch of these zones. And they've been working on this for over 3 years. They've never been really fully funded. They decided, let's go and get $5 to $8 million. They sat down with Bay Street, and they ended up announcing $12 million. Part of it at 44 cents for hard dollars, and the other part at about 63.5 cents for flow-through charity. And flow-through charity is different from actual flow-through. Flow-through just goes to tax dodgers who are dumping the stock as soon as they can. In a charity flow-through swap, it is washed through a Canadian charity, and it is hard dollars that are owned by the longer term shareholders. And it's great for the company because they get to do a financing at a premium. Now, here's a phenomenon that's been happening over and over again during the last 3 weeks. You announce a deal in the morning, and by the end of the day, the deal has been upsized. In this case, they upsized it to $17 million. And what I've often seen is that within like 2 weeks or so when the deal closes, it's been increased again. So there is tremendous demand emerging from Bay Street, which has realized, okay, the cannabis bubble is done. It's not coming back. We are in a gold market, and they are scrambling to get exposure to projects. Now, what kind of projects are they interested in? Galway Metals is a classic example. They have an existing gold system that they acquired from another company, Free West originally founded, and they're now putting a lot of capital to work to demonstrate that this thing is worth mining. They won't have a resource estimate, an updated one, until the first quarter of 2021. But with this financing and a recent warrant exercise, they have $22 million in the treasury. And a really important thing that we're seeing in this market is it's not the gold price which is leading this market. People think, okay, gold's knocking on 1,800 door. That's what's driving the interest. Well, to a little bit it is, but this is different. People have tired of being at the mercy of processes that they cannot control. Now we're seeing farther down in the food chain, companies that are still doing discovery delineation or even trying to make brand new discoveries. They are attracting the market's interest. So we have people, influencers out there with the social media talking about this, spreading the word. We have actual investors who are accredited and can put money directly into treasuries, influencing the destiny of the company. And the company itself is controlling its destiny by wisely spending exploration dollars to create value. And the market in this time of extreme uncertainty has homed in on this and wants to bet on these juniors. And it's particularly the case in Canada because Canada acted quickly and quite severely to suppress the COVID-19 pandemic. And so exploration activity is able to be done in Canada. So Galway is now in excellent shape to keep drilling, keep creating value. We're in a context where the gold price will continue to rise in the background, probably break through 2,000 by the end of the year. But it is the discovery delineation process of an existing gold system that has captured the market's imagination. They have 174 million shares fully diluted, 5 rigs on the property. that most of them activity is focused on stitching together the 2.5-kilometer trend of the Jubilee, Richard, and George Murphy zones. There's no resource estimate for them yet, but they're also got 1 or 2 rigs roaming around the project doing what they call wildcat drilling. There's an awful lot of soil geochem and golden till anomalies on this property. It's a fairly large property. And about a week ago, they announced a step-out hole about 1,000 meters to the southwest of the Jubilee limit of that 2.5-kilometer trend, and it yielded 185 grams over 0.6 meters in a quartz vein. And you say, okay, a tiny little quartz vein, but it's in the context. This is a hole. There's a couple nearby that hit something, but nothing as spectacular as this. And this is telling the market, yes, this entire contact with the intrusion that these guys are tracing is very fertile with gold, and it's a brute force thing. You're not like drilling at some geophysical anomaly where it's either there or it isn't. You're tracing the patterns, the structural patterns, the shears and all that, and gradually bringing into view a big gold system, and this one's going to be medium to high grade with a component that's open pitable, but also potentially underground. So the market loves it. They're getting discovery delineation that's financed to carry on well into 2021 with 75,000 meters of drilling. And as gold goes higher, they also get to piggyback on the enthusiasm for gold. And this is a natural one for newcomers saying, okay, gold's almost 2,000. Where's it going to go from there? Maybe 2,500. But where's the leverage? And here's a company, a junior, that's building a gold system that who knows how many multi-million dollars ounces there are to run. And of course, there are people like Eric Sprott who stepped up and took $3 million of this financing. Last year, when he put $150, $200 million into all these juniors, he turned around and there was nobody following in his tracks. He was completely on his own, betting on all these juniors. Now everybody is racing in behind him to jump into the market or participate in the deal onto which he has put his blessing. And this is now rippling throughout the system. It's happening. Many companies, Eric's not in all of them, but a lot of companies are now getting traction. It's quite exciting what's happening.
We'll have more with John Kaiser right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with John Kaiser. John, Elm Exploration made a big move when it gave an Elmer update. What have we learned?
Elm Exploration is an example of a brand new discovery. It became apparent in January when they announced the results for the initial 7-hole drill program done on the Patwan prospect. That's a relatively small footprint, but it had the right geological setting. It had the high-grade numbers. And when they did an IP survey afterwards, it appeared that they had a method for tracking where in the 7-kilometer shear structure the gold zones would materialize. So they finally began drilling, I believe it was in late May, and they reported that they have completed 33 holes. 11 of them have already been logged and shipped for assaying. They expect assays for the first batch in a couple of weeks. They're drilling to a maximum depth of 200 meters vertical. When you look at the drill pattern that they reported, you can see that they first started to chase the IP chargeability highs in the Elm 1 target, and they've got 2 rigs on the property. They also took one and they took a shot at the Elm 2 and the Elm 3. But from the drill pattern, you can see that obviously they weren't overly excited by what they saw on that part. So they went back to the Patwan and started marching in the northeast direction, drilling deeper. And they announced that they've drilled 5,600 meters. They're expanding the program to 10,000 meters. At $3, the 70 million fully diluted shares makes this project be worth $200 million in the eyes of the market. We do not yet have solid confirmation that what we see at Patwan, it repeats itself along the trend. And we still want to see if the geophysics, the IP chargeability anomalies, which reflect the disseminated pyrite with which the gold is supposed to be associated. We still do not know yet whether this is turning into a productive marker or whether the company is going to have to start just chasing the zone and stepping out in smaller increments. There wasn't a huge amount in the news release. They admitted they've got the visible gold in some of the holes and all the right sort of stringer veining and these things that geologists want to hear. And the market seems to be quite happy. We'll see in a couple of weeks what the first 11 holes deliver. I'm not sure quite whether one should hold one's breath for that because they were stepping out from the original zone trying to get their bearings. But when you look at the drill pattern, it's clear that as they're now on the 40th hole, they have a feeling based on field observations where the system is going and what they need to do to continue to outline it. And there's still only dealing with a 500 to 1,000 meter segment of what is ultimately a 7-kilometer segment. And Azimuth's an example of the market's appetite for new discoveries, something new and different. It's not an existing system with the 100, 200,000 ounces already in existence that everybody's now chasing deeper, such as I talked about last week with Elm Exploration, where, all of Ontario and Quebec, it's now red hot for projects where work has been done in the past and they only maybe looked a couple 100 meters deep and found it lacking in terms of what you want to put into production. But now everybody's scrambling and looking for these juniors, and this is a lot of fun for me too because I watch all these groups. They're all in Kaiser Research. I know the management teams. I compile all the data on them. And a lot of these things are just waking up. It's a very fun part of the market to be in, to see discovery and excitement about discovery driving in the market attention for this sector.
We'll have more with John Kaiser right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, Eskay Mining Corp is on the move. Is the hunt for Eskay Creek 2 on again?
Definitely, for sure. I started covering this company in 2017 when Silver Standard, now called SSR Mining, optioned up to 60% of the SIB Lulu portion of the SIB Quarry project that this company has in the Golden Triangle. Now, over $50 million has been spent since the 90s when Eskay Creek 1 was found. If you found another Eskay Creek today, it would be worth $4 billion Canadian, which with the number of shares that Eskay Mining now has outstanding, fully diluted, 152 million, that would be like a $21 price. Now, the company lagged. always because its balance sheet was terrible. Mac Balcom could not really raise the serious money. I got excited when SSR went in there with a pretty aggressive deal, and for 2 years they hit the project hard. They had some theories about where to find Eskay Creek 2. The Lulu Zone had been found in 1991. It was a high-grade gold-silver intersection, and everybody figured it was the tip of some sort of iceberg somewhere. And the theory that drove SSR in its exploration strategy was this idea of the Coulter Creek thrust, which had moved the rocks from the east westwards and basically shaved the Lulu tip off the iceberg that was beneath. And because the stratigraphy is on its side in that area, the rocks that are on surface that you can map, they obscure what the rocks beneath it that was detached from actually looked like. And the strategy that SSR embarked on was to move west into the hopeless Bowser Lake sediments and drill low-angle holes to go beneath the Coulter Creek thrust into the footwall and map out the stratigraphy and use alteration vectoring to home in on where is the source for this Lulu Zone that could be part of Eskay Creek 2. But after 2 years, they really hadn't hit anything. They'd spent $7.7 million. And at the end of 2018, they handed it back to Eskay Mining, which was then back into an 80-20 joint venture with Kirkland Mining. Last year was a disaster for Eskay Mining. They didn't raise any money. They still had a bad balance sheet. But late in the year, Quentin Henney took an interest in the project. He brought on board Tom Monarchy and John DeDecker. And John DeDecker has taken this on full time. They did a very deep dive into all the work that SSR had done, and they came up with a startling conclusion, namely that the Coulter Creek thrust was completely wrong. Rather than the rocks from the east detaching from their roots and sliding westwards, the reality was that the garbage Bowser Lake rocks from the west had detached and slid westwards. And so what all the exploration activity had focused on was actually the footwall of the original Eskay Creek system. Now, the 21B zone sits in the contact mudstone underneath these younger basalts, and beneath that is the rhyolite volcanics, which have the feeder system, the 21C zone that Skeena Resources is now delineating as a gold resource. And then there's lower mudstone units below that. And what's very clear to the north in the ground that Skeena now has, where it hopes to earn 100% from Barrick without Barrick backing in for 51%, that area there was pumped and had a lot of alteration in there, showing that this area was fertile up there. And they found the 21B zone. When SSR went in there, they were looking for similar evidence of alteration, and they concluded, it's not really there. But when John DeDecker looked at it and did his microscopic analysis of the stuff, he said, this is classic but subtle alteration that's typical for a volcanogenic massive sulfide system. And when they did the deep analysis of the contact holes and saw where the drill went from the Bowser Lake sediments into the Salmon River Formation units, that's where they realized, oh my gosh, this Coulter Creek thrust theory is completely wrong. And that's important because when you move westward, you get into the contact mudstone and then the basalts. And these are now believed to be hidden under the Bowser Lake sediments to the west. So the entire trend from Eskay Creek 1 onto the Sib Lulu property, it is basically untouched. So this year, they're going back in and they're relogging all the core on the project. They're doing more sampling. They're also resubmitting for full geochemical analysis portions of the core so that they can build a very detailed 3D model with all the alteration patterns so that they can start to reconstruct what's going on in that area. And what really helped the stock out was they bit the bullet and did a financing. They raised about $2.5 million at 17 cents hard and 25.5 cents for flow through. The Mac Balcom converted some of his accumulated debts into shares, so the balance sheet is no longer ugly. They're in charge of the destiny. They really don't have enough money to do a serious drill program, so they will have to raise more. But they do want to drill a number of geological test holes before the snow flies. Some of those will have to go into the Siblulu area and test this theory that this new Coulter Creek thrust is actually correct, and that the prime area where where Eskay Creek 2 is likely to lie, that the whole geological context is correct. And they also want to drill a couple of holes farther south in what they call the Jeff TV zone area. And in this area, it's very wooded, lots of trees, not much mapping has been done, but there are these east-west faults, and Eskay Mining thinks that the Eskay Creek trend has been displaced eastwards, and that TV and Jeff are a continuation, and that's still part of the 80-20 Kirkland ground. And then farther south in the core 100% Corey area, there's the C10 target. They want to do a deep hole under that. They think this is porphyry, copper gold porphyry potential ground. They want to get some geological data. So they'll probably need to raise a bit more money for that. But this year is a conceptual setup for big game hunting for a $4 billion elephant, and they're in great territory. They've got all those Seabridge copper gold projects to the east. They've got the high-grade Brucejack, and even farther to the northeast, we now see that Tudor and Teuton are on an absolute tear, drilling off the Treaty Creek play. And that was something that was around, tantalizing everybody in the original Eskay Creek days. So lots of activity going on in the Golden Triangle, but Eskay Mining, the fact that we're seeing the market embrace this, even though it's purely conceptual, and there's a chance that if COVID-19 rears its head in Canada, that things get shut down late in the season, that this might not get drilled until, say, the summer of 2021. There is still a market appetite for these well-thought-out, concept-driven exploration plays.
John, thank you so much for the update, and have a great Independence Day.
Thank you, Jim.
I'm speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howestreet.com. Discovery Watch is a production of How Street Media Incorporated.